episode 94 of the 10,000 Trade Show, where we are mastering trading and creating excellence through the deliberate practice and analysis of 10,000 trades. In this episode, we'll take a look at a double bottom trade setup. A double bottom is formed when the price rejects the support level twice. This usually means that the price is likely to move higher. I will show you how to identify this trade setup under live market conditions, where to enter the trade, where the best place for stop losses, and most importantly, how to exit the trade with a profit. So let's take a look at the charts now. Here we are looking at volume price analysis. This is Euro US dollar 4-hour chart. In this example, we'll take a look at how I use volume with price action and how I use volume to refine the trades. As we can see here, price has been moving up. It has gapped up here and then it goes to test another level. And from there, price pulls back and then holds right here. In this case, what we can do here is when we look at this green candle, we see that the volume is green. If you look all the way down here, the volume that corresponds to the green candle is green as well. And then we get a red candle. And as you can see, the volume increases. The red line is higher this time. What that tells us is that when the price was pushing higher, we did not have as much volume behind that. That means we did not have as many orders behind that push up as we did when we had the price coming down. So in this case, the volume increases when the price comes down as opposed to when it's going with the trend, which in this case was to the upside. And then as we can see here, price kind of goes sideways, doesn't really move anywhere here. And when you look at the volume at the bottom here, the volume is white, which is neutral, another white bar, and then a tiny green bar, which shows us that there is really no buying interest at this point. The sellers haven't completely stepped in, but there is no buying interest here as either. And the next candle we see here, there is a red volume again, and then we have neutral volume, and then a red volume starts to increase. So this is the kind of thing that I'm looking for in order to confirm my entries with volume. So I trade price action, then I use volume as a confirmation in order to take trades, stay in the trades, and exit the trade. So in this case, I would look for price to come down, and I'm looking for change in volume. As we can see here, price has been going up. It has been going sideways in certain areas, but for the most part, it has been pushing higher. So the green volume has been a lot higher than the red one. So we see a few spikes of red volume, but overall it's a bit messy. So we don't really have a good volume in here because this day was very much a range bound day. Price didn't really move very much, and then after that price jumped up because it opened up, pushed up higher. So we saw some green volume on the open, and then we start to see red volume coming in, and it goes sideways from there. And then with this candle here, we see that the volume spikes up again, and now we know that the sellers have actually stepped in. So in this case, you could either take an entry after the close of this candle or somewhere in here, because we are not seeing any green volume that is suggestive of buyers pushing the price higher. Once we enter the trade, stop goes above the high here, and we stay with the trade. And as you can see, the volume is all red, which tells us that this is the correct thing to do for us, and the price action tells us that as well. The price is likely to move higher, and then we get into this area where we start to see a bit of congestion. As we can see here, this is our previous support and resistance area coming here. Price is holding below this level, which is a good sign because that shows from price action perspective that we're likely to go lower, and then we get here and price drops further. So while we are here, as you can see, as is expected, volume is is muddled up because we are seeing both the green candles and red candles. But what's important from price perspective here, price action perspective, is that price is staying below our support and resistance area. So in this type of scenario, you can start trailing your stop, so moving the stop to the previous candle, above the previous candle. That way it protects your stop, but it trails it as the price moves lower. So we would trail our stop here, move it here, and as price continues to go sideways, we would just hold it here, not really move it because we don't have clear direction here. And then price dropped. As you can see, as the price starts to drop, our red volume here, this is messy, but here we see a red volume picks up, and then we go sideways once again. So at this point, as you can see, price has dropped quite a bit, so we can pull our stop behind the candle here, move it behind this candle, and then continue on. After this, once the price starts to go sideways here, we are likely to get stopped out with the profit, so we would exit the trade. So from entry to exit here, we get approximately 260 pips in profit, or $2,600 if trading one standard lot. So just to recap here, we are using a volume with our price action. In this case, we wait for price to show us a nice big red candle here, which suggests that the sellers are stepping into the market, and we confirm that with our volume. As you can see, the red volume starts to come in, and then we see a lot of red volume as we continue on with our trade. As long as the price continues lower, we can stay in our trade. Once price starts to go sideways, as you can see, more of the green volume is starting to come in now, our stop would get triggered and we would exit the trade with a profit. From entry to exit here, 260 pips in the trade, or $2,600 if trading one standard lot. If you'd like to learn more profitable Forex trading strategies like this one, I invite you to visit my course at tradingwithvenus.com/Forex course. In the course, I will show you how to read the candlesticks and different chart patterns. We'll do a deep dive into technical analysis, and I will show you how to read the charts properly, what trade setups you're looking for, and how do we trade these setups properly. I will also show you what are the important fundamental things that you need to pay attention to, how the different fundamental factors drive market price. I will also share with you the trading strategies that I personally use that I have found to be the most profitable. We'll also talk about trade management and how to manage your account and manage your risk so that you become a profitable trader. I will also show you tons of examples that you can go and check out so that you are able to see these trades set up in the live markets as well. As a bonus, you will get access to my pivot point indicator. If you have watched any of my videos, you know I really love trading the pivot points, so you will receive that as a special bonus. The price of the course is $497. To sign up for it, please go to tradingwithvenus.com/Forex course. Thank you so much for joining me today. I hope you enjoyed this trade setup. If you like this episode, please like, comment, and subscribe below. It was a pleasure sharing this trade setup with you, and I will see you next time with another great trade setup.